The whole idea is instead of Americans going out and taking their money, hiding their money and investing their money somewhere else, get people to bring their money to the United States. So therefore, if you bring your money, we're going to give you some incentives. We're going to give you some tax cuts, some tax credits. Most people, I guess, don't know about how you can hire your minor children to work for your company, for your business. And this is beautiful because you can pay up to $12,000. And the beauty is they do not have to pay taxes. They don't even have to report the tax return. Another best kept secret, it's called the Augusta plan, right? All the residents that live in Augusta for 2 weeks, if they rented their house to all these people that were coming to the tournament, they will actually give them the benefit of not paying taxes for those 2 weeks, up to 14 days. So you can rent your house up to 14 days tax-free. To me, it's been one of the best things that I've ever seen in my lifetime.
Hello everyone and welcome to Nova Rice once again. And in today's episode, we're going to learn about the common mistakes that are destructive in terms of taxes. And for that, I have a special guest joining us today that is going to answer all the questions that you typically leave me in the comments section. And at the same time, we're going to help you prevent those common mistakes that could potentially destroy your real estate portfolio or your business. And without further ado, let's just welcome Henry Aldana. And here we are with the expert in the field. We have Mr. Henry Aldana from Aldana and Associates. Welcome, Mr. Henry.
Thank you, Lucille, for having me. I'm excited to be here. Sure, we're going to have a lot of fun today.
Yeah, definitely. And thank you so much for making time out of your busy schedule to kind of walk us through basically everything that's going on with the tax code here. So before this call, we're actually talking briefly about the changes to the tax code and how it's benefiting us all, not just in terms of as business owners, but also as real estate investors who are managing their real estate portfolio as it is a business. So can you share a little bit more light into it for us?
Sure. Well, 2018 with the tax reform, it's called the 2018 tax reform. Actually, the United States has actually kind of become like a paradise. I mean, you know, a fiscal paradise for businesses. And the whole idea is instead of Americans going out and taking their money, hiding their money and investing their money somewhere else, Trump, the idea was actually to get people to bring their money to the United States. So therefore, you know, if you bring your money, we're going to give you some incentives. We're going to give you some tax cuts, some tax credits. If you actually do that, if you start actually investing in the United States, creating jobs, creating businesses, and not only that, but just keeping your money here. If you keep your money here, obviously, you know, it gives leverage to the economy, having more money. So the reform actually created a lot of opportunities for not only for Americans, but for the global economy, for global investors to come and do business in the United States. So to me, it's been one of the best things that I've ever seen in my lifetime.
Thank you so much for sharing that. This is great information. So Robert Kiyosaki, you know, always says it's not so much about the amount of money that you made, but it's more about how much money you manage to keep in your pocket. So it seems that reform, that change from 2018 has actually made things better for Americans in general to be able to keep more money in their pockets. So what is some of the advice that you can actually share with everyone who's listening today in terms of what is it that they can actually do in terms of tax-wise so that they can start taking advantage of the new tax code?
Okay, great. One of the things that I love is actually the accountable plan. Although the accountable plan, it's always been in existence, but it was actually not used. It was one of those things that were actually being kept secret, and not many people were using the accountable plan. Now it has come back, and it has come back strong. And I'll explain to you what the accountable plan is. I will say program is a plan where you can actually have your own company, right, reimburse you for a lot of expenses that before, I mean, they have always been available, but before the reform, there were certain things that you took in your Schedule A as deductions, but those things were gone. The reform actually eliminated also a lot of the benefits that were on Schedule A. So therefore, now the accountable plan has been one of those, I will say, kept secrets, best kept secrets in this industry, in the accounting industry, for us, for investors, and to advise our clients, where you can have, instead of having income, I mean, some things reported to you as income, now they can be reported to you as reimbursements. Wow. And I'm not going to get in details, but remember, the accountable plan has become one of the best tools right now to reduce your taxes. Another best kept secret, it's called the Augusta plan, right? So it's kind of like a hidden gem, right? Where does Augusta come in? Where is Augusta? What is this about? Back again in the 60s, they built, I will say, back in the 40s, they built in Augusta, Georgia, they built one of the biggest golf courses to have the golf tournament, the famous Open golf tournament. And they built the most beautiful, I guess it was the biggest place to have these tournaments, but they didn't build enough hotels around it. So what they did is like, how are we going to bring people to the event if there are no hotels? So they decided, Augusta, Georgia, decided to give all the residents that live in Augusta for 2 weeks, if they rented their house to all these people that were coming to the tournament, they will actually give them the benefit of not paying taxes for those 2 weeks, up to 14 days. So you can rent your house up to 14 days tax-free. So that's where the Augusta plan comes. So you can rent your house. An example, let's say that as an executive, I rent my house every month to have a meeting in my house, here with my corporate partner, which is my wife, right? So we have a meeting here. Instead of paying the hotel of having the meeting, the company will actually reimburse us through also the accountable plan. But it's the Augusta. We're using the Augusta. It's like a rule of thumb, right? It's not a written law, but it's there. It's called the Augusta plan. And therefore, you can actually, an example, one of our clients rented their house for $24,000 for a weekend. Wow. Where we had an event. We had a private event where I was doing coaching. $24,000 for 1 weekend. So he got $24,000 tax free, and he could have done that for 14 days, meaning 24,000 14 times,
perfect,
right? And have that totally free. So again, there's so many things that are now in this plan, in this reform, that you can take advantage and reduce your taxes. And the idea is to keep more money in your pocket tax free, right? So where you don't have to pay it, you keep it for yourself, where it should be, right? So as a business owner, as an investor, that's what we want the money in our bank accounts or in our pockets, and not in the USA Treasury.
Perfect. I did not know that about the Augusta plan. So thanks a lot for sharing that. Now, you mentioned $24,000. So is there a limit as to how much you can reimburse yourself? I mean, aside from the reasonable market price and stuff like that, but is there a cap as to how much you can do? No,
I mean, there are houses that are worth, imagine how much you will pay to take your team to a resort, right? Let's say that you're taking your team, the whole team, to a resort. And if you have your house and have the event at your house, how much would you, an example, I had an event, it cost me about $50,000 to have a weekend event with my team. So if I was to, obviously this house is not big enough to rent to those kind of events. But there's mansions that are actually worth, you pay $100,000 for the weekend. So there's no cap. It's obviously have to be market value.
So, wow.
Market value.
Very interesting. Thank you. I didn't know that. It's actually the first time I'm hearing that. And since we have a lot of investors who are actually tuning in, one of the very common questions that I get all the time is about the popular 1031 exchange, and tied to it will be the capital tax gain. So we all know, at a high level, that 1031 exchange means like kind, but given that you are the expert in the field and you're seeing tons and tons of examples, tons and tons of scenarios, can you shed some additional light as to what we normally don't know about 1031 exchange and how the investors can actually use that for their benefit?
Absolutely. Well, the first thing that actually everyone who is actually planning on using this law, which is 1031, right, like an exchange, is that if you're planning on trading, selling your investment property and buying another one, you got to make sure that you have to have it in advance. You got to know that that's what you want to do. Why? Because you need to hire an agent to actually manage it before it happens. Even before well, the moment you decide, okay, I'm going to do it. I'm going to trade this property for a bigger property or an equal value or more properties. And I don't want to pay taxes. I want to reinvest the proceeds and the revenue and the profits, so I don't have to pay taxes. Definitely, first thing, you need to hire the agent. The agent have to be able to manage it correctly. And the idea is that money cannot come to your bank accounts or to your personal bank accounts, because if that happens, then the whole 1031 exchange is voided. It doesn't work. Even if you have the intention of actually doing that, and that's the problem. I see a lot of people saying, you know what, I hear that I could actually trade my profits from that entity into a bigger property, or different property, similar property. But you have to make sure that you have the agent before you do this. Otherwise, then you're going to have to end up paying the taxes. So that's one thing. The other thing is actually you can buy different properties as long as the value is more or equal. You can split in different properties. Or if the property is the same value, but if you're an example, let's say you buy a house, you have a house, you're selling a house, but you want to invest it into a building, into a commercial building. That will also help, but you got to make sure that it is done correctly, so you actually reinvest your profits and continue reinvesting your profits. And at the end, who never knows what's going to happen? Maybe one day something happens and say, what? Maybe everybody who's done 1031 exchange gets pardoned, and then there you go. You have millions and billions of dollars that nobody's going to pay taxes about. Nobody knows, right?
We can't really look into the future. True. So just as a quick recap, we have to follow protocol, right? And like an exchange can be defined in so many ways, right? It doesn't have to be just one property that's worth 100,000 and then having to buy one that is 150. But what I'm hearing is you can also buy multiple properties as long as the total amount can sum up to that. But the key to even be able to do that is that your money has to be housed with an agent, right? And I think you and I have heard that multiple times. A lot of people just selling their property and then putting cash into their bank accounts, and then with the intention, which is very difficult to prove to the IRS, right? Like, we can intend many things, right? But in the end, it's all about the evidence. It's what you can demonstrate to the government, to the IRS in this case, in order to do that. So I really appreciate you sharing that. That is something that I haven't done yet in terms of 1031. So now I know beforehand that even before thinking about selling a property, the first thing I should do is just to reach out to an expert who handles those kinds of transactions, and then have everything prepared, because in the end, it's the preparation. That's the key to doing everything, right? You don't want to go ahead and just do something out of the blue and then having to undo something that was not right from the get-go.
The idea is to have the plan. I mean, it's developing. They have designed a plan for you, which is actually at the end. That's what the IRS, in case you're questioned, that's what you need to show the IRS, and that's kosher. That's what you need. So to be able to use and take advantage of the 1031.
And that's in essence what you do in your office, right? Like, you work with your clients to do a lot of the tax planning. You actually meet with them either when you first onboard them, or when it's kind of like the beginning of the year, when you sit down with them and you sort of like assess and you evaluate, okay, what is it that you intend to do? What is it that you want to do for this upcoming year? And see what's actually better. I think it sounds from our conversation that nothing is set in stone, but the beauty about the new tax code is that it's flexible, right? You can prepare once, and then as you move along the way, it's something that you can actually adjust slowly, but you need to do it with a professional. You need to know exactly what you're doing, so that that money that you're making, that you're working very hard for, can stay in your pocket the way it's supposed to be, correct?
Absolutely. I mean, the idea is to shield it legally. And in the tax plan, when I prepare a tax plan, I give my clients the whole package, where I tell them exactly where in the code it's written. And that way, if they get audited, actually they have to show them that, show my plan. And definitely, that's written in stone. I mean, it's written in stone there, but definitely, like you say, it can be adjusted. It can be as flexible enough that every year you can make an adjustment. If your business situation is changing, if your business is growing, or you investing in new entities, or investing in creating new businesses, then you should revisit it every year. But if you're doing the same thing every year, then every 5 years is good to revise your plan, because a plan is actually a device that will help you. It's a tool that will actually give you at least a 5-year plan on what is it that you want to do and how you're going to use it to reduce your taxes and put more money back in your pocket.
Perfect. Thank you. Thank you for clarifying. Now, in this channel, we actually have people from all over the world tuning in. We have people from England, New Zealand, Ireland, who like to learn this kind of information because they're looking to invest in the United States. And since you mentioned the reform, the tax code, what benefits do they get as an international investor when they come into the States and invest their money? Do they get the same tax breaks, so to speak, or maybe not, but then perhaps they get other benefits? Can you walk us through a little bit more about that?
Absolutely. Well, definitely. Usually, the tax code and the tax rate for international or foreign investors is usually higher. That's how, especially in real estate. Talking about real estate, it's usually higher, right? However, though, there is structures that you can develop. I mean, it depends on how sophisticated, and depends on how much you want to invest in shielding your money, right? The more you create a strategy, so obviously the more at the beginning is going to cost you money to prepare the infrastructure that will help you protect it and reduce your taxes. But at the end, it's like, it's how big you want to get, how complex you want to get, and how sophisticated you want to get to reduce your taxes. As you know, here in the United States, there is actually, the way I say it is actually there's only 2 tax codes in the United States, and there are, right? For you and me, and for the average person and the elite who don't pay any taxes. And people say, hey, what do they do? The truth is, I don't know enough what they do. Otherwise, I'll be working with them and probably making that kind of money. But what I know is that there's plenty of cuts and tax strategies that we can use to help you reduce your taxes. And you don't have to be a super rich. You don't have to be a billionaire or trillionaire to be able to take advantage of the tax laws for you.
Thank you, Mr. Henry. It's definitely very informative, so thank you for sharing. Now, I have another question for you. I've heard, I'm a daughter of immigrants, right? And then back in the days, my parents, they had their mom and pop's restaurant, and all 5 sisters were actually worked in the restaurant. Now, when I moved here in the state, I've actually heard of cases where you can actually hire your kids, quote unquote, or any dependent that you have, and not only your kid benefits from receiving that money that could eventually send them off to college, but at the same time, their parents as business owners or as investors, and in general, they also get a tax deduction for hiring their own family members to their own company. So, can you elaborate a little bit more about that?
Sure, absolutely. Most people, I guess, don't know about how you can hire your minor children to work for your company, for your business. And this is beautiful because you can pay up to $12,000 to your children that are minors. And the beauty is they do not have to pay taxes. They don't have to even report the tax return, as long as it is $12,000. So that means that you can help. Let's say that you have two children, right? 2 kids. You can pay them up to $12,000 each, $24,000 total. And because they're minors, right? They don't have to report their income. So therefore, they're getting taxable, non-taxable income, but it's deductible 100% to the company. That means, let's do an average. Let's say that your taxable rate is 29%, right? Mm-hmm. And that money you pay to the kids, right, to the children, you're saving about $8,000 in taxes when you pay your children, about $24,000. The law says that you have to actually pay him a salary, right? Write him a check, right? And they have to open a bank account, and they have to deposit the money into the bank account. Okay. But the law doesn't require that the kids manage their money. As a matter of fact, the law doesn't require who manages the money. In this case, the parents decide what they're going to do with the money. So therefore, you can do whatever you want with the money. You can reinvest their money. You can save it for college. You can use it however you want to use it. So therefore, there you go. You got $4,000, $8,000, right, total for 2 kids in savings. So the money stays in your pocket, and you don't have to give it to Uncle Sam. right? So I love that deduction.
I love that example. I actually have a girlfriend who does that. So her and her husband, they have multiple properties. And so what they do is that the husband and my friend, they still work. They have their regular daytime job and whatever. And every income that they receive from the real estate investment, the rents, what they do is that they pay that out, just like you said, to their daughters. And it's tax-free, and they actually now fast forward 18 years, they have been able to finance their own college education on quote unquote tax-free money. And in essence, it's not like you're giving them the money away. They actually do work. They do household chores, right? So you come in and you shred paper, right? You help your dad shred paper, you clean the kitchen, you put the table. And not only you're teaching them to be disciplined, but also at the same time, you're putting money away that's going to benefit them in the future while you're benefiting at the same time by basically reducing your taxable income in your taxes. So thank you so much for sharing that.
You're very welcome. Another deduction. Most people are afraid because I guess their accountant tells them, "Hey, don't put your house as a deduction." Well, if you run your business from home, even if you had an office outside, right? And I'm an example. I'm working from home these days, right? And even though I'm, right now, the company has always reimbursed us. Before we used to have a rental where the company will pay us rent, but I used to include it as income. Now it's like through the accountable plan, the company is now reimbursing us for the use of the office. And actually, I'm not only working here every morning, but my wife, we both are working here. So we have a lot of space that we're now using, and therefore we are now not only this week, but we've been doing it for a couple of years since the new reform and gave us all these tools. We've been reimbursing ourselves for the use of the home. And the beauty is this: when you're being reimbursed, that's not income. Reimbursement is actually money that you're getting back for what you use. I use it for my business, and now therefore my company is now reimbursing me for having this space that I work, where I work to provide services to my own company. So therefore, I am legally getting a reimbursement for the use of my house as a business. So, and a lot of people are afraid because their accountant, so their tax preparer tells them, "Hey, are you sure you're using this? Why are you putting the deduction?" I'm telling you that it's legal, and it's in black and white. You can use the home deduction as a tax deduction in your taxes, and use it as a reimbursement, so you don't have to include it as income.
Perfect, Mr. Henry. Thank you so much for your time, for sharing this awesome information. And for those who are looking to get a very knowledgeable accountant who can help you not just in your tax planning, but also in every endeavor that you're looking to do with real estate, get started the right way with your LLCs or any legal entity. Right below here in the description box below, I'm going to leave you a link where you can actually get access to Mr. Henry's contact information, and you can actually go straight to his calendar and schedule an appointment with him so that you can have a one-on-one conversation and see what's the best course of action for your investment and anything you plan for the future. So that's pretty much all I have to say, and I'll let Mr. Henry to say the last words before we conclude this episode today.
Thank you. I really appreciate you inviting me to your channel and to this video with you. And I definitely love to help your audience. I definitely love to help them keep more money in their pockets where it should be. Thank you again, and see you next time.
Thank you. Take care. Bye-bye.
Bye-bye now.